Hey everyone, welcome back to the Deep Dive.
It's great to be here.
Today we're going to be taking a deep dive into the world of small business financing in the U.S.
That's right. We're going to be looking at a report from the U.S. Department of Treasury.
Fresh off the presses, January 2025. So brand new.
Yeah.
And, we talk a lot on this show about the importance of small businesses to the U.S. economy.
Right.
We all know they're vital. They're really the backbone.
Absolutely. I mean, we're talking about, almost half of the nation's GDP, 43%.
Wow.
40% of the private payroll.
Huge.
And, the majority of new jobs.
Right, 70% if I recall.
Something like that.
So, with that being said, with that in mind, it's kind of a head-scratcher why so many small businesses are struggling to access capital.
Well, the report starts off with a pretty startling statistic. Over 3/4 of small business owners are worried about access to capital.
Wow.
And this is despite the fact that the market is, well over $1 trillion. We're talking $1.4 trillion.
So a lot of money. So where's the disconnect?
Right. So, there are government programs that are doing great work.
Right.
We've talked about things like the State Small Business Credit Initiative, the SSBCI, the CDFI fund. And these are, really doing a lot of good, especially for those businesses that have not had, equal access to capital.
Right.
But, they can only do so much. And, for the most part, it's private capital providers that are really the main source of funding.
And one of the main things that the report highlights as a challenge is the cost of financing.
Right.
I was reading that a third of small businesses struggle to make their debt payments.
Yeah.
Because interest rates are so high.
Yeah.
And that's before you even think about rising costs of goods and services.
Right.
Yeah.
It's tough out there.
So let's talk a little bit about the landscape of lenders.
Okay.
Because obviously, there's the traditional route of going to a bank
Yeah.
for a loan.
Yeah.
And we all know the drill installment loans, lines of credit, all that,
Right.
Based on your credit worthiness,
Yeah.
your business assets,
You're right.
all the good stuff.
Yeah.
But things are changing, right? We've got this rise of fintechs
That's right. Yeah.
over the past 15 years.
Yeah.
Yeah.
They're being a much larger role.
Right.
And, what's interesting is they're using different ways to make loan decisions. They're not just looking at your credit score and your assets. They're looking at things like your business plan.
Right. More holistic.
Yeah, exactly.
And even just, experience running a company, which is fascinating.
Yeah, it really makes you wonder, are they filling a gap left by traditional banks, or are they, serving a different segment of borrowers altogether?
Yeah. Interesting question for sure. But one thing that seems to be a challenge, regardless of, what kind of lender you're going to,
Right.
is this lack of clear information
Yeah,
that small businesses have access to.
absolutely.
The report really dives into that.
It's almost like you're trying to put together a puzzle, but all the pieces are different shapes and sizes.
Right.
And there's no picture on the box.
I like that analogy.
Now, there's no standardized way
Yeah.
to compare these different loan products.
Right.
So it makes it incredibly difficult to weigh, the real costs and risks.
It's true. And we all know as consumers, we have certain protections in place when we take out loans.
Right.
Like the Truth in Lending Act
Yeah.
requires lenders to disclose APR so you can compare apples to apples.
Absolutely.
Small businesses don't have that same protection.
That's right. And, you think about someone who is maybe, just starting out,
Right.
doesn't have that network of, mentors and advisors.
Yeah. They could end up signing on the dotted line for something that they don't really understand.
Absolutely.
Yeah. So that's a really important point.
So speaking of things that can be tricky, let's talk about the high cost of capital.
Yes. Because everyone always says you need money to make money.
That's right.
But sometimes it feels like you're giving an arm and a leg just to get your hands on it.
Yeah. We see that bank loans typically have interest rates below 10%. SBA loans, you're going up to maybe 16%.
Got it.
But then you have these other types of financing, like sales-based financing.
Right.
And these can go upwards of 25%. Some of them even have APRs of like 200%.
Oh, 200%. Can't even imagine.
It's a lot.
Yeah.
And, the report breaks down why these costs are so high. Lenders view small businesses as risky.
Sure.
The cost of underwriting these loans is high.
Makes sense.
And, at the end of the day, it's really tough for a business owner who's, trying to make payroll, keep the lights on, and
Right.
they've got this huge chunk of their revenue going towards debt payments.
Yeah. That's definitely not a recipe for success.
Not ideal.
So we've got high costs. We've got confusing information.
Right.
This is a lot for a small business owner to deal with.
It is.
And it's not just about the cost, right? It's also about the structure of the financing.
Exactly.
Because a loan that might work really well for a tech startup might be a disaster for a, seasonal business or
Right.
something with less predictable revenue.
And this is where that mismatch comes in because, with the traditional bank loan, you've got that strict repayment schedule.
Right.
You owe X amount every month, no matter what.
Yeah.
And, that's tough for a lot of businesses that have fluctuating revenue,
Right.
especially if they don't have a ton of cash on hand.
Makes sense. So, you might have a great month and then a slow month.
Right.
And that fixed payment can really throw things off.
Yeah, it's tough. And then, you have these cash advance products that offer more flexibility, but then we go back to those sky-high interest rates.
Right. It's a catch-22.
Exactly.
So, are there more creative financing options out there that are designed to fit the unique rhythms of different businesses?
That's a great question.
I think that's something worth exploring.
And, speaking of different approaches to financing, we've been talking about debt.
Right.
But what about equity financing?
Equity financing always seems so mysterious to me.
Right.
It's like something that only high-growth tech companies have access to.
Right. The report shows that it's heavily concentrated
Yeah.
in just a few places, Silicon Valley, Boston, New York.
Got it.
And it leaves businesses in other parts of the country.
At a disadvantage.
Yeah, it's tough.
Yeah. And it's not getting any easier, right?
Yeah.
Because investors are shifting away from startups and towards more established businesses.
Right. They're looking for that sure bet.
So if you're a small business owner who doesn't fit that typical mold,
Mm-hmm.
where do you turn? Are there, hidden opportunities out there, or do we need to totally rethink how businesses get funded?
Those are great questions.
Big questions for sure.
Yeah, and I think that's something that the report really leaves us pondering.
Yeah, for sure. We were just talking about, the challenges of equity financing. But even with debt financing, there's another player changing the game: technology.
Right, technology is kind of a double-edged sword when it comes to financing.
How so?
Well, on the one hand, it's opening up all these new possibilities. We've got online lenders, we've got crowdfunding platforms, and these can be real lifesavers for businesses that might not have, a bank on every corner or haven't had much luck with traditional loans.
So it's like having, a whole new financial toolbox at your disposal.
Yeah, exactly.
Okay, so more options,
Yeah.
more access. That sounds good.
It is good, but, there's the other side of the coin, too.
Okay, the flip side.
Yeah.
Yeah.
Technology can also widen the gap between those who have access and those who don't.
Right. So it's like any powerful tool that can be used for good or for bad.
Absolutely. And the report brings up a really important point about artificial intelligence and machine learning.
AI, right? It's everywhere these days.
Yeah, it's being used more and more to make loan decisions.
So can AI really make lending fairer, or is it just, automating existing biases?
That's the million-dollar question, isn't it?
Yeah.
The promise of AI is that it can, analyze huge amounts of data,
Right.
spot patterns that humans might miss, and potentially lead to, more accurate lending decisions. But here's the catch. If those algorithms are trained on data that's already biased, then they're just going to perpetuate those same biases.
So it's garbage in, garbage out.
Exactly. And that's why the Treasury is, urging regulators to really keep an eye on how AI is being used in finance and to set some clear guidelines to make sure it's being used fairly.
So we're not throwing the baby out with the bathwater.
Mm-hmm.
We're just saying, hey, let's use this technology wisely.
Exactly.
Speaking of smart solutions, the Treasury report has some interesting ideas for tackling these challenges in small business financing.
Yeah.
We've already talked about, collaboration research, but there's this one pretty bold move that they propose.
You're talking about creating a dedicated government task force.
That's right.
Yeah, bringing together experts from all the different agencies to really focus on making capital more accessible for small businesses.
So it's like a dream team for small business financing.
Yeah, exactly, like an all-star team.
I love it. So instead of each agency working in isolation,
Right.
it would be a coordinated effort across the government.
You've got people from the Federal Reserve, the FDIC, the SBA, the Commerce Department,
Wow.
all working together.
Yeah, that sounds powerful.
Yeah, and they'd have a few key missions. First of all, they would be gathering all the existing data on small businesses from these different agencies
Got it.
to get a really comprehensive picture.
So it's like putting together a giant jigsaw puzzle.
Mm-hmm.
Each agency has a few pieces,
Right.
but together you get the whole picture.
Right. And, they could be tapping into resources like the Small Business Credit Survey that the Fed conducts, the
Mhm.
SBA's loan data. It's really about making the most of what we already have.
Smart. No need to reinvent the wheel. Just put all the wheels together. What
Exactly.
else is on their to-do list?
Well, they'd also be tasked with making sure that regulations keep up with the rapid pace of technological change.
Right, because, as we said, technology can be a force for good, but it needs those guardrails.
Absolutely. And, we're talking about things like AI and new underwriting methods. So this task force could provide that much needed clarity and consistency.
Across different agencies.
Yeah, encouraging responsible innovation while still protecting borrowers.
That makes sense.
For example, we see some lenders are using automated systems for collecting payments, and this can lead to borrowers repaying much faster than they thought they were going to and end up with a much higher effective interest rate than they thought they were getting.
Yeah, it's like those sneaky fees that get tacked onto your cable bill.
Right, exactly.
Okay, so they're tackling technology, but they're also, advocating for borrowers, making sure that things are fair.
Right.
Right.
Well, they could also tackle this trend of, lenders offering bundles of services along with loans, and it can make
Okay.
it really difficult to compare offers.
Right, you want apples to apples.
Exactly. So this task force could help create a more transparent marketplace for everyone.
Transparency is key. It's like, shopping for a car. You want to be able to compare prices and features without having to decode a bunch of fine print.
Exactly. And beyond just dealing with technology, this task force could also work on encouraging banks to make more loans to small businesses.
Especially those that have been underserved.
Right, because ultimately we want everyone to have a fair shot at success.
Makes sense. And how would they do that?
Well, the report suggests exploring ways to help smaller lenders access secondary markets,
Okay.
which is basically a way for them to get more money to lend out to businesses like
This
yours.
is like building a bigger pipeline to get that financial fuel flowing.
Right, exactly. And the SBA already has some programs like this.
Yep.
So it's about finding what works and expanding it.
Got it.
Now, we talked a lot about debt financing, but this task force wouldn't stop there. They would also be charged with finding ways to make equity financing and other non-debt options more accessible.
Because, as we've discussed, debt isn't always the best fit.
Right, especially for businesses that have, fluctuating income or ambitious growth plans.
How would they make equity financing more accessible?
Well, they could explore how to adapt existing models like going public or private placements to better serve the needs of small businesses.
So tailoring the suit to fit the customer instead of trying to squeeze everyone into the same size.
Exactly. And they could also investigate the potential of these alternative funding models like crowdfunding and cooperative ownership.
Crowdfunding, I mean,
Yeah.
that's really interesting. It's like tapping into the power of the community.
Yeah, it's a really exciting space.
Yeah.
And perhaps most importantly, this task force would be a champion for underserved business owners.
Right.
Monitoring disparities in access to capital and actively fighting against discriminatory lending practices.
Because as we've discussed, those systemic inequalities create huge hurdles for a lot of businesses.
Absolutely.
So we need someone who's really focused on leveling the playing field.
Exactly. Imagine a group of experts whose sole focus is to identify and address the root causes of those disparities.
Wow, that's powerful.
Working across agencies to use existing programs and resources more effectively and holding lenders accountable for their practices.
So it's about going beyond just talking about the problem
Mm-hmm.
to actually taking steps to solve it.
Exactly. And the report highlights a number of offices within existing agencies that are already dedicated to, supporting entrepreneurs, particularly those who have been historically underserved.
Okay.
So this task force could really bring all those efforts together.
Amplify their impact.
Exactly.
So we've talked about the potential roles of this interagency working group, and it's clear that it could be a game changer for small business financing.
Yeah, it has a lot of potential.
But it all comes down to execution, right? It's one thing to have a plan.
Absolutely.
It's another to actually make it happen.
It requires a real commitment to collaboration, a willingness to embrace new ideas,
Yeah.
and a dedication to dismantling those systems that perpetuate inequality.
And we have to remember that we're not just talking about numbers on a spreadsheet.
Right.
We're talking about people's lives,
Yeah.
their dreams,
Exactly. Every small business represents someone's vision for the future.
their livelihood.
Yeah, a path to financial security and independence. So by making capital more accessible, we're not just supporting individual businesses, we're investing in the health and vitality of our communities and our economy.
Powerful reminder that opportunity starts with access.
Exactly.
And access starts with having the resources to succeed.
Absolutely.
Speaking of which, the Treasury report also calls for a major shift in how information is presented to small business owners, something they call uniform product disclosures. We'll have to talk about those uniform product disclosures
Right.
and how they could really help make things clearer for small business owners.
Yeah, it's all about transparency.
Transparency, exactly.
Imagine walking into a grocery store
Okay.
and all the prices are in different units.
Like some by the pound, some by the ounce.
Right, some by the piece. It would be nearly impossible to compare costs and make informed choices.
That's a great analogy.
And that's kind of the situation that a lot of small business owners face.
Right, they're trying to compare these loan products.
Exactly.
But the terms are all over the place.
Right, there's no apples to apples comparison.
So how would these uniform disclosures actually work?
Well, the report suggests that we take a cue from consumer loans.
Okay.
When you buy a car or get a credit card, you get a clear breakdown of the interest rate, the fees, all the key terms.
Right, thanks to the Truth in Lending Act.
Exactly.
So they're saying, let's do that for small business loans too.
Yeah, let's give them the same level of transparency.
Makes sense.
The report recommends that policymakers study the feasibility of implementing these kinds of standardized disclosures
Got it.
across all types of financing, from traditional bank loans to merchant cash advances and everything in between.
So it's about leveling the playing field.
Exactly.
Everyone's speaking the same language.
Right.
Does the report give any specifics about how these disclosures would be designed?
Well, they emphasize the importance of user testing, making sure that the disclosures are actually clear and concise and helpful for business owners.
Yeah, it's got to be user-friendly.
Exactly.
You don't want to just create more confusion.
Right.
So like focus groups, surveys, that kind of thing.
Exactly. Getting feedback from real borrowers.
Makes sense. And then refining the design based on that feedback.
Right. It's all about iteration.
Okay, so disclosures are important, but the report also acknowledges that they're not a magic bullet.
Right. Even with the best information in the world.
Yeah,
Some business owners might still need some guidance.
sure. It's like having a map but not knowing how to read it.
Exactly.
You still might get lost.
That's why the report also emphasizes financial education and outreach.
Especially for, folks who maybe don't have a network of advisors or mentors.
Right. They might not have access to those traditional sources of financial advice.
So it's about pairing that information with education.
Exactly. Giving them the tools and the knowledge they need to succeed.
I like it. Knowledge is power, as they say.
That's
So ultimately, what's the Treasury's message here?
Well, I think it's about creating a financial system that truly works for everyone.
Okay.
It's not just about, fixing the symptoms, but addressing the root causes of inequality.
Right. Creating a more level playing field.
Exactly. And fostering a culture of responsible lending.
Responsible lending, that's key.
Absolutely.
So fair, transparent, and accessible.
To everyone, regardless of their background or their zip code.
And it sounds like this report offers a roadmap for getting there.
I think so. It highlights the importance of collaboration
Between who?
between policymakers, regulators, lenders, advocates.
Everybody working together.
Yeah, all rowing in the same direction towards that shared goal of a thriving and inclusive small business ecosystem.
That benefits everyone.
Exactly.
All right, and while this report focuses on the U.S.,
Right.
obviously these challenges are not unique to the U.S.
Absolutely. Access to capital is a global issue.
For sure. So we can all learn from each other's experiences.
Yeah, sharing best practices, collaborating across borders.
Global collaboration.
Exactly.
I like it. So to wrap things up, we've taken a deep dive into the world of small business financing today. Explored the challenges, the opportunities, and some potential solutions.
We've covered a lot of ground.
We have, and we hope that this has sparked some ideas for you, giving you some things to think about as you navigate your own journey as a small business owner.
Absolutely.
We encourage you to, delve deeper into the report, maybe connect with some organizations that are supporting small businesses.
Yeah, there are some great resources out there.
There are. So get involved and, think about how you can contribute to building a more inclusive and supportive environment for entrepreneurs.
In your own community.
In your own community, that's key, because ultimately investing in small businesses is investing in our collective future.
That's right.
It's about fostering innovation, creating jobs, building a stronger economy.
For everyone.
For everyone, that's what it's all about.
Absolutely.
So thanks for joining us on this deep dive.
It's been a pleasure.
It has. And until next time, keep exploring, keep learning, and keep those entrepreneurial spirits burning bright.